Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Monday, February 9th, 2009. The euro-dollar pair rose today as speculation a U.S. financial recovery plan now due to be announced tomorrow will limit losses at banks, which reduced safe haven demand for the dollar overnight. The pair fell in the Asian session, testing the 1.2875 level, but rose about 200 pips thereafter to reach the 1.3090 level. The euro-yen also fell in Asian trading as stocks in Tokyo were down, but those losses were paired as a sense of risk appetite came into the markets in the European session. One factor behind the rally in Europe was relief about the size of Barclays' profit decline. Therefore, after hitting the 117 level, the euro was back near 120 in early New York trading. The Australian dollar, following a strong surge on Friday, eased to start today's session, but then climbed to another high near 0.6850. That was about a 200 pip move from low to high and sets a new 3-week high at a resistance point from January 19th. Crude oil futures gained more than 5%, which would be the biggest one-day rally in 2 weeks, which helped commodity currencies such as the Aussie and Loonie. However, U.S. stocks fell into the red in afternoon trading, which capped the rally we have seen in the three pairs we presented. The theme of risk appetite extended to the pound-dollar pair as well, as it continued its rally against the dollar, running up against the 1.50 level. The pair set an intraday low at 1.47 before continuing its rally, that has seen the pair climb almost 1,500 pips from the 1.35 level within the last 11 sessions. In fundamental news, orders for Japanese machinery declined for a third straight month in December, though the pace of the decline was much softer than expected. Orders fell 1.7% following a 16.2% drop in November. And this may indicate that Japan's industrial sector may be past the worst of the downturn brought on by the global economic crisis. Japan's current account surplus slumped in December, with the unadjusted total falling to 125.4 billion yen or $1.36 million. That's a 92.1% drop on the year, led by a sharp drop in exports in the wake of the global economic slowdown. The German trade surplus for December, though staying around its levels from November in seasonally adjusted terms, fell to 6.9 billion euros in unadjusted terms. It was 10 billion in November. Exports were down 3.7%. Tonight, the UK will release a measure of retail sales and housing prices. Australia, meanwhile, puts out its quarterly release of the NAB Business Confidence Index. Overnight, Switzerland posts its CPI, while the UK reveals its trade balance and leading index. Tomorrow, the US will post its wholesale inventories, but the main piece of news will be Treasury Secretary Geithner unveiling of the administration's plan to shore up the financial industry. And that wraps up today's recap of the markets. Thank you for joining us here at CMSFX.com, and we'll see you tomorrow. Happy trading.